Now let's bring in the former Cleveland Fed president, CNBC contributor Loretta Mester. Welcome back. It's nice to see you.
Thanks, Scott. Good to be with you.
What do you want to hear from Chair Warsh tomorrow?
Well, I'd like to hear what Steve Leisman has just been talking about, really getting a sense of how he's thinking about the economy. So not forward guidance, but really what's the framework around how he, as chair, is thinking about the economy, inflation, maximum employment. I do think we're not going to get that, though. He's been very explicit of not wanting to present any forward guidance about the September meeting, or even forward guidance or anything that could be construed as forward guidance. So I think we're going to be a little bit disappointed in what we hear from the chair on that particular thing. I think he doesn't see that there's a problem that needs solving with this communication. Instead, I think we'll get more of what you usually see at Jackson Hole when there's a new Fed chair, which is really a big picture view of the economy, how it's changing and what it means for the Fed.
So you clearly think he needs to give the markets a little bit more.
Well, I would like to see that. I think the public, too. I mean, it's an accountability issue. We want to see how a Fed chair is thinking about the economy. He doesn't have to promise us anything, but just how is he seeing it? What does he look at? How's he evaluating the current state of the economy? And an explanation of why perhaps they made the decision they made in July, and you know, what, not about September, but just explaining what he did in July and why.
Mm-hmm. I mean, he's obviously intent on making significant changes to the institution and how it goes about its business. Some suggest that's a much needed evolution, while others say this is a revolution, that it's taking it too far. Where do you come down on that?
Oh, there's lots of things that can be improved in the processes of the Fed, and a lot of the things he's laid out, I think he will have members of former and current members of the FOMC on board with, but we don't really have much insight into exactly what it is. The task forces, I think, are well constructed. The people on there are experts in the field in both theory and practice, and I think there's going to be some good things that come out of that. Then the FOMC will take it up and deliberate.
What about the idea of fewer meetings that's been tossed around? He's said to have talked about that. I think the last minutes mentioned that. Would you be in favor of that? Does it matter if there are two fewer meetings?
You know, I think you can come down on either side of that. The benefit of having fewer meetings is that you have more time in between, but you may end up making policy a little bit bigger steps, if you will, because you're going to be going in fewer times. So I think there's worth talking about it. I don't think it's going to be a substantive change in how the FOMC deliberates and makes policy.
How do you view what the Treasury has done, intervening in the bond market, and whether that is at odds at what the chair is trying to do with the Fed, if it complicates the road ahead now for Chair Warsh and the others on the committee?
Well, I do think it's ironic that you have Kevin saying we want, clear signals from the market because that'll help us make policy, and then you have the Treasury going into the market trying to change sort of what those market signals are. However, the other thing Kevin Warsh has been saying all along is that Treasury manages debt and we manage price stability in a context of maximum employment. So to that extent, again, I don't think he's going to address that tomorrow in his speech because I think, he wants to stay away from that and allow. I do think it complicates things a bit for him in the sense that, it was cleaner when he could argue that we're going to be able to take the market signal and that's going to help us make our policy.
Play the ball, not the referee, is the way that he put it. You also had the feeling that he wasn't all that upset with the fact that the longer end of the curve was backing up a little bit. It was helping him, maybe buying him some time, doing the Fed's job for it while he lets the task forces do their job before he may give us the information you're suggesting we need.
Yeah, but I don't really see that as a good argument in the sense that, yes, it can be restricted on the economy, but you got to understand why are those long rates going up. And if you're not willing to make an action with your own policy rate at the short end, then there can be an inconsistency there, and that could be telling you that it is time for the Fed to take action. Certainly the economics case for taking action and raising rates, I think, is an easier case to make than the case of standing pat. And I think we want to hear a case for standing pat, given that that's what the FOMC did last time. What was the case for that?